Is it morning, afternoon, colleagues? My name is Mr. Singo. Oh, good morning. I think it's 11. Okay. Yeah, I'm trying to. Okay. Okay. We are going to do a cash flow statement, which will be in question number one. And then before we do that, we need to understand what is cash flow. Uh, Cash flow is a statement that shows us the acquisition and the application of funds, meaning it shows us the inflow and the outflow of cash. Now, uh, I'll write some of cash flow statement. Uh, is a statement so you know where to acquire those funds. Number one, we can acquire funds from our operations, meaning that something that is happening in our business in the daily process or daily basis, that is our operations. Again, we can acquire funds through investing. Again, we can finance our company via e-loans and also issuing of shares. And then again, the money that we already have in our company, which is our cash and cash equivalent. So, kids, guys, we know that this is how we acquire our funds. And then again, we also apply the funds that we have acquired. From operations, we are going to generate cash via maybe selling of stock. Also, when you are buying also your stock is also part of your operations. It means trading stock is going to be affected. You know our sales can be credit or also cash, isn't it? So if it's credit, then it means debtors likely have to they're going to pay our debts. Then investing, as a company, you need to invest in your fixed assets. And so investing on your fixed assets, your fixed assets again is going to assist you to generate what funds. Again. But when you go and buy fixed assets, it means now money is going out. Ne? Again, we are looking at financing. When we finance, we can finance via e-loan. We can acquire our funds from a bank, which is financing, or we can issue shares so that we can run our business. And then again, we can buy back those shares. Ne? And then cash and cash equivalent, again, we must check if we don't have the bank overdraft. Bank overdraft is when you have acquire more money than what you have in your bank account. You also check those things. Now, basically, a cash flow statement, it shows the inflow and the outflow of cash. And then when money goes out, it goes out by the indication of a bracket. It goes out when we are paying for our dividend, interest, because we acquired the loan, we need to pay interest again. Again, we have issued shares, additional shares, and then remember the moment you buy shares or you issue shares, the shareholders are going to get what? Dividend. So when we pay the dividend, especially interim, the money is going out. Ne? So this is the structure of the cash flow basically, but not in details. Now let's put it in details so that you understand what we are talking about. Now let's go to the structure. Number one, our cash flow statement, the structure is very much important. Number one, we have cash flow from operating activities. Now, guys, you can use acronyms so that you won't forget the components that we have under cash flow from operating activities. The acronyms that I usually use is CD. It's our CD. The C stands for what? It stands for cash generated from operation. Generated from operations. And then the I is interest paid. And then the D is dividend paid. And then the I here is income tax paid. Now remember the acquisition and the application. The money is going to go out when we pay our interest. and then when we are paying our dividend, and then when we are paying our income tax. Then we go to the second activity, which is cash flow from investing activities. Here you are investing money so that you can generate more money. Again, you can invest by buying what? By buying your fixed assets, ne? And then also doing the fixed deposit is part of investment. Ne? So here, also I use acronyms. Uh, Here I'm going to use PPC. Now, PPC, remember guys, the cement, this is the structure of our company. Yeah, the strongest cement. Those who are building, they know. Trevor, you know this. I mean, PPC, we have purchases of fixed assets. Guys, I would advise you to check your balance sheet under the non-current asset. That's where you're going to get your investment in it. So here, basically, we are busy with the non-current assets, purchases of fixed assets. Here we have proceeds on sale of assets. Ne? And then here we have change in investment or fixed deposit. Ne? Yes, investment or fixed deposit. Remember, we are checking where did we get our money. We can get our money from selling our assets or from the investment that we have invested in another bank, ne? Or another company. Then, as we get that maturity, then that's when we're going to get our money. And then we can application again. When we purchase fixed assets, money is going out. Ne? So purchases of fixed assets again is going to be indicated by what? By a negative to indicate it by brackets to indicate that you have paid. Don't forget this. Ne? Okay, good. And then we go to our here. Again, it's either the company can go and invest money, take out money, and then invest again, or the investment now has matured that you can access it in your company. Then we go to the third activities, which is cash flow from financing activities. Here we are going to look again. I'm using acronyms, ne? CD, PPC, ne? Uh, so here, usually I tell my learners, okay, if you are not given anything here, you can just go for A, B, C. It's easy to memorize that it's A, B, C. And then the A stands for what? Additional shares issued. Ne? And then the B, you are given what? Buying or buyback of shares. And then the C, it will be your changes in loan. So, but again, I also tell them if you are given this, you must know here we have what? We have proceed on shares issued and then repurchase and then here again changes in loan. And then not to forget the money that we already have in our bank account because we are looking at them. Where do we get our money? And then the money that is already there, which is the net change in cash and cash equivalent. And then here we have cash and cash equivalent at the end, at the beginning, sorry. And cash equivalent at the end. Yeah. Don't mind the handwriting. That is the accounting teacher handwriting. We are money doctors, ne? You know the handwriting of a doctor. Hey, you don't even see what you are writing, but they are giving you a prescription at that time when you are sick. But yeah, we don't mind that one. Okay, guys, this is our structure. Um, This is our cash flow statement structure. Then we advise learners to always compare our financial statement, which is income statement, sorry, statement of comprehensive income and statement of a financial position. So, especially under the statement of financial position, you'll be given 2 years. You're going to compare the years and check the changes. If money went out or money came in. Okay, so let's come back to our question paper. Okay, before we do that, we are given some notes. I'll basically look at these two: dividend paid and income tax paid, and also check this as part of our notes. And again, we are going to check the purchases of fixed assets and proceed. And then, yeah, that's it. Now, can we just deal with them individually? So, I'm going to start with the cash generated from operations class. Uh, you can also assist. You still remember that? Yes? Okay. 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 Thank you. Thank you. Okay. Oh, okay. Uh, okay. Okay. That's good. Okay, as Mr. Chino was saying, here the acronym that he used, it will be pencil, pen, and then the calculator for investing activities. And then when go to the cash flow from financing, it will be pencil again, rubber, and what? And calculate. So it will assist learners that they know, okay, investing, we have a pencil and a pen. Okay, thanks, Mr. Chino. Okay, we do anything just to assist our learners. Ne? Yeah. Okay. Um, now, guys, let's go to cash generated from operations. We need to deal with these nodes separately. Ne? Number one, I will erase here, and then uh, what do we call it? Okay, but usually it's like this. It's what? It's a reconciliation before net net profit before tax and cash generated from operations. And it is the node, ne? And then now we are getting what cash generated from operation. Okay. Now, what do we have under this node? We have number one, net profit before tax, ne? And then what else? We have adjustment, ne? Adjustment in respect of, ne? Number one, we have depreciation, and then we have interest, ne? Interest expense. Now, this part, we are going to check our income statement. That's where we are going to get our net profit before tax and our depreciation and our interest expense. Ne? So by doing this, we are adding them back because this one is an imputed what? Expense. Ne? No money went out on this one. So we add it back. And also here, we are adding it back because it will be double counting because we are going to put it there under our cash flow statement. Remember, that's interest paid. Ne? So we're not going to, we're adding it back so that yeah we can calculate. Okay, let's move. Then we add all these. We have operating profit before changes in working capital. Now, what do we have? Here is it. And then we have what? Changes in working capital. Okay. Now, what do we have under changes in working capital? Again, your working capitals, you are going to look at your this part here. You go to your balance sheet under your current assets here. That's where you're going to get all these and also your current liability. Current assets here, current liability here. Here you look at your income statement here. Statement which is also known as statement of comprehensive income. So what we have under here, under our working capital, we are going to look at what? Inventory. Okay. And then we are looking at what? Trade, trade and other receivable. And we are also looking at what? Trade and other payables. Now, remember your note as you're preparing your trade and other receivable. You have, let's start with the trade and other receivable. We have the likes of your debtors control, your provision for bad debts, your prepaid expense, your accrued income. They form part of your what? Your trade and other receivable, as well as what? As your SARS income tax. So SARS income tax must be removed if you are given the note like this, because you are going to use the SARS income tax as you are preparing your what? Your income tax paid. Same applies when it comes to trade and other receivable. If you have your SARS income tax and your shareholders for dividend on this one, you must take them out because you're going to use them to prepare your dividend paid and SARS income tax. Now here we're going to check the changes. Changes, changes, changes. You'll be given 2 years. You're going to compare those 2 years in our statement of financial position. You check the changes. Okay? Usually, what I tell my learners, I will say, what? Here, you take the previous year and the current year. You always start with the previous year in order to check the changes. Or last year I had this, and then this year I have this one. So if they're taking the previous year, I will tell them that the assets, if you get a negative answer, that will be your outflow. If you get the positive answer, it will be your inflow. Only on the assets part. But when it comes to the payable, it's a different story. You do the vice versa. If you get a negative, it's your what? It's your inflow. And then if you get your positive, it's your outflow. Altogether. Then we get changes. Cash generated from cash generated from operations. Okay, good. Now we are done with our cash generated from operations. Let's go to the second note, which is our, it was what? Dividend paid. Let's go to dividend paid next financial year. So it means now the previous shareholders for dividend will be paid this year altogether. Previous shareholders for dividend or previous final dividend is going to be paid on the current year. But the one that we have this year, final dividend, will pay on the following year. So here is our dividend paid. So under dividend paid, what we have, the one that we're going to pay usually is interim dividend. And then our interim dividend will be given maybe the number, the dividend per share, and then we are going to use it to use our shares, then we multiply so that we get our interim. Or we can use the retained income again. It's going to give us our dividend. That's where we get our dividend. And then you add shareholders for a dividend at the beginning. Now, at the beginning, the previous year, already I mentioned that they will give you 2 years. They will give you 2025 and 2026. 2025 will be your balance at the beginning, and 2026 is balance at the end. So they must know this. Now, there are two methods in which you can use to calculate your dividend paid. Another method, it will be your shareholders for dividend. And then you add your total dividend. And then you subtract your shareholders for dividend. Now this is shareholders for dividend at the beginning. And then this is the shareholders for dividend at the end. Now, this one I'll advise my learners, or they must check the information that they have. If they are given interim, they must just go and look for shareholders for dividend. That is simple. Ne? If they are given total dividend, they simply come and say shareholders for dividend plus total dividend minus the shareholders for dividend at the end. Then they will get their dividend paid. Eh? Are we okay? Ne? Can we move? Okay, let's move. Okay, we go to what next? Income tax. It can enter into a contract with another company, and then as a legal entity, they have to pay what? Tax. Ne? Now, as they're paying tax, we know that SARS income tax is part of our liability because you are liable to pay SARS. Ne? You are liable to pay SARS. Now, as you are liable to pay SARS, it means you are owing SARS. Ne? Now, our SARS income tax can either be what? An asset or liability. Ne? Now, it's an asset when the business is being owed by who? By SARS. And then it's a liability as we are owing what? SARS. Now, our income tax will always indicate that we are owing. And it's our income tax. It's the money that we are liable to pay. Ne? As a legal person, you need to pay your tax. Ne? Everyone must pay tax. And then companies pay income tax. Us as workers, we pay ne? Pay as you earn. Okay. Now, if our SARS income tax balance is at the beginning, I usually prefer this one. You go to write your balance, eh? And then income tax will always be here. And then your bank is on this side. So you always check your balance at the end, OTE. If it's written DR, just know what it's your balance and the next financial year. Angithi ivula ngala. Mara ivaleni. Ivale ngala ku credit side. Angithi. When you open your balance, if you close here, let me just write balance, wrote down here, and then balance carried down. This is 2025, and then again here is your 2026 here. Ne? You close this side, you're going to open on which side? On this side. Ne? So if that is your balance brought down. The balances that were given, that's what I told my learners. The balances that were given here is the balance at the beginning of 2025 and the balance at the beginning for 2026 out together. So if here it was closed here, it will open where? This side. So we go back there, out together. Before it was closed, out together. Same applies. Our balance can either be here or that side. Again. Okay, good. Let's move on from SARS income tax. Okay, kids, if I'm fast, you can just say, Minero, you're too fast. I'm taking time. Ne? Yes, Mr. Baloi. Purchases of fixed assets or proceed on sale of assets. Ne? Usually, I said you focus on your fixed assets. Ne? And fixed assets, you know that we're going to look at our current value. Fixed assets at current value. So I'll take my learners to the fixed asset node. Ne? Fixed asset node, we have something called current value. I told my learner, okay, current value. In order for us to get a current value at the end, here's our current value at the beginning. Here's our fixed assets. Now, I said we have an equation here. In order for us to get the carrying value at the end, we are going to have our carrying value at the beginning. And then what do you do with the carrying value at the beginning? You are going to add your additions on cost. Yeah? And then addition on cost, you are going to subtract your what? Your disposal. Disposal at carrying value. Then you are going to subtract your what? Your depreciation. And then you are going to get carrying value at the carrying value at the end. I even make my learners to sing this one. Also, how do we get the carrying value at the end? Or start carrying value at the beginning plus addition minus disposal minus depreciation equals to carrying value at the end. Now, I even do this. I will write an equation for them so that they will not forget. I will write CVP, that is the carrying value at the beginning, and then plus add, that is addition, minus this minus deb equals to CVE. Eh? Now they will also sing this CVB plus A plus this minus this equals to CVE. So by this, we can always get whatever we are looking for because the fixed asset that we have in our balance sheet is at carrying value. How to get? They will write fixed assets at carrying value. Okay. So if I want my additions, which again I will indicate to my learners, additions are our purchases or our extension. So we can always solve for this. Now remember, we're teaching learners who are doing mathematics, physical science, and accounting. So they are familiar with this. It's MSTA. Okay, good. Fixed assets at carrying value. We know this: beginning, addition, disposal, and depreciation. Okay. I think I've covered that one. Yeah. Yeah, investing activities. Now, guys, these are the notes that I usually teach my learners. And then the last one, it will be net cash and cash equivalent. Okay. Ma'am? Oh, finance. Oh, okay. Sharp, ne? Okay, let's go to now. Preparation of ordinary share capital is going to assist us to prepare financing because usually we are looking for additional shares. We are looking for what? For repurchase. We are looking for what? For loans. Ne? Okay. So usually this one, I always go back to how to prepare ordinary share capital, again, retained income, all those things. Yeah, so I'm not going to dwell much on this one. I will go to net change in cash and cash equivalent. Net cash and cash equivalent. Now, uh, remember when it comes to this one, we have cash and cash equivalent at the beginning. And then we have cash and cash equivalent at the end. Okay, guys, hey, before we even go to this, so I wanted to make it simple for you guys, or whenever we go back, you always refer to your notes, how to get this one. Okay, good. Now, again, here we remember, in order for us to get the cash and cash equivalent at the end, net cash and cash equivalent, we must start with our cash flow from operating activities. Then if we are subtracting our cash flow from investing. If we are adding our cash flow from financing. Then whatever we're going to get our net cash and cash equivalent. Now, when it comes to this one, we are always advised to check our bank overdraft. What is bank overdraft? It's when you acquire more money than what you have in your bank account. It doesn't make sense when you can have 5,000 and then at the same time you're owing 20,000. You have acquired more than what you have. So your bank overdraft, if it's here at the beginning, you're going to take your cash and cash equivalent at the beginning, and then you subtract your bank overdraft. then always you start with your cash and cash equivalent, the amount for cash and cash equivalent, and then you subtract your bank overdraft. You are always going to get what? If you have bank overdraft, you're always going to get what? A negative answer. And then you check if your cash and cash equivalent at the end, is it positive or negative? If it's positive here, if it's positive here, then the net change in cash and cash is positive. If it's negative, then this one is negative. Altogether. Okay, good. Now, class, I taught you how to prepare this one, so we are going to do this together. Altogether. Now, let's start again afresh at average share price, as we are preparing our ordinary share capital. So, a repurchase is made out of, here's our repurchase. Um, so, our repurchase, I'll give my learner, so it's all here, and then O, ordinary, R, retain, and then here is our triangle. Eh? So here is our cash flow, and then here is our retained, here's our ordinary share, share capital. So when we prepare cash flow statement, we want the amount that we took out to repurchase shares, and then this one was retained because we use average here under our ordinary share. So it may happen that you are given ordinary share capital and then you are also given the amount for retained income. So we want the total. When you add these two, you must get our cash flow amount. So if you are given here and then you don't have this, you can always use this one to get a cash flow amount there. I don't know, Minera was clear enough too. Okay, thank you. So you must always go for a triangle. Know that the cash flow is when you add ordinary and then your retained income under a repurchase. Okay, can we move on to our questions? I think time. Okay. Oh, okay. Yeah, average. Yeah. Above, ne? Above. Okay, okay. Okay, total, ne? Okay, total. Total price. Okay, thank you, Lena Baloy. So, I, yeah. So we must also go for, we are saying what, below average, ne? Okay. Mm, below. Okay. Uh, oh, 18, yeah? Yes, Shai. 18, right? 19. 19. Is it 18 year? And then 19 year? And then, oh, okay. Okay. Usually, I think I'm with the assumption that the average share price must always be less than the. Oh. Okay, thank you. Marks, we must make sure that we get them. As already Mr. Baloy mentioned, or Lena Baloy said, for a learner who wants a distinction, each and every mark is very much important. Also, the concept they must go through it. Now, they must know this one. If we go to 1.1, it says choose the correct word from the list below which best suit each statement. below. Write only the word next to the question number in the answer book. Now, guys, uh, we have used of borrowed capital loans to finance the business. Now, the learner must always go for those words on the box there and check the one that is not part of the questions then. And then must also choose from the one. Just eliminate one that you think or is not going to be relevant then. Number one, profitability. We are checking the profit margin of the company. So profitability, we are not going to look at it, but let's go and check the three. So the one that suits 1.1, the correct answer will be what? Gearing, ne? Gearing, ne? Yeah, gearing. And then we go to 1.1.2, the ability of the business to pay short-term debts. That will be our liquidity, ne? Liquidity. 1.1, we said it's our gearing. And then 1.1.2 is our liquidity. Ne? Now, obvious, we've already eliminated profitability because we know that profitability is the ability of the company to check that the profit margin. So profitability is not going to be part. Then the last one will be solvency. Good. Eliminate the one that you think is not part of, and then you go for those ones that you think good. Okay. Now, let's go to 1.2. 1.2, we have Yumba Ltd. This information relates to the financial year and the 30 April 2026. Guys, you must always be watchful of the financial year end. Okay, it will assist you on when you look at your additional information there. Now, let's go to, we are going to complete our ordinary share capital note. It means we are given answer book and then we are completing from our answer book. Let's go to our answer book. Minero, can you, JJ, can you also show the answer book there? We have our, it will be ordinary share capital. So that's our, now, learners are advised to use the what? The information that is given there from our answer book. Because now if we're going to say shares at the beginning there, it must be not balanced. Shares issued at the beginning. Shares issued at the beginning of the year. And then make use of the amount that is already given, which is 4,704,000. Then we have shares during in issue during the year. And then we have a space. And then we have shares in issue at the end of the year. Then we are given. On the answer book, there's a zero missing there. So you can just add a zero. There's a zero missing on the answer book. Yeah. Okay. So there to prepare ordinary share capital, then learners are to be told go to the information that is talking about a issue of shares. And then they will make it simple for you guys because it will be written in bold words or these are shares or to be indicated or the information deals with what? With shares. Now, if you go to information D, that's where we are going to look at our how to complete our ordinary share. Now, if you go to D, we are going to start with all the bullets that we are provided. Now, the first bullet, it says authorized share capital consists of how much? 2,100,000. thousand shares. Authorized shares are shares, a maximum number of shares that the company is allowed to issue. So lenders should not take that 2,100,000 and put it under our ordinary share. Here we are going to look at shares that were issued or the shares in issue. Now, bullet number one is not going to be applicable. We are not supposed to write that 2,100,000. Let's go to bullet number two. On 1 May 2025, 70% of the authorized shares were in issue. Our focus is on the issued shares, not authorized. Out again. Okay. Again, I said we must be careful of what? Of the financial year end. It's 30 April 2026. So now, if it ends on 30 April 2026, it began when? May 2025. That is the balance at the beginning. So how much it will be? But of authorized. How many shares were authorized, guys? We have 2,100,000 shares. Then you are going to multiply by what? They said 70% of those shares. And then our answer is going to be what? 470,000. Then we simply come and write our balance at the beginning. The number of shares because the value, okay, sorry, the balance at the beginning, the number of shares, here is the value, which is 70,000. And then learners must not mix the two. This side we record the number of shares, this side we record the amount, the value. And then on the answer book, usually they will write rands are like this to indicate, or here we are putting what amount. And then this side we put what? The number of shares. Okay. Now let's go to the second one. Third bullet. On 30. Oh, yeah, it was given, sorry. It was given 300. Okay. Now we don't have what? We don't have the additional, the one that we issued during the year. They just told us that 300,000 shares, additional shares were issued. Now we go to the bullet number on 30 September 2025, an interim dividend was paid. Now that one is part, it's not part of our ordinary share capital. And then we go to the last bullet, 230. Yeah? And then we have brackets. Here we have our repurchase. Now again, we are going to look at our average share price. Now, how do we get our average share price? Our average share price, I will always advise my learners, or we do what? I will check the shares, the amount of money before repurchase, divide by the number of shares before repurchase. Amount before repurchase, divide by number of shares before repurchase. Now, if you go to here, we don't have any amount, so we're not going to apply that one. But I know that whenever I got the average share price, if the repurchase is at the end, then it means we can easily get our average share price by using the balance at the end, the amount, and the number of shares at the end. Yeah? Okay, now what are we going to do? We are going to add these three, these two, and then we subtract this one. Then we are going to say 1,470,000 plus 300,000 minus 230. Then we get how much? 1,540,000. Now, if we have this, we can easily get our average share price. Remember, the value divided by the number of shares. And then our average share price, this is how we are going to get it. 5,852,000 divide by 1,540,000. Thanks a lot, Mr. JJ. Then I JJ there. Okay. Let's go to income tax paid. Now, guys, you still remember I showed you the format of calculating our income tax paid. You still remember, ne? We want the money that we paid in our bank, ne? So that is our income tax paid. Now we go to our information. Anything that relates to SARS, it must be We must use it in order for us to get income tax paid. Now let's go to our information. Remember, we are using the previous information from information A, B, C, D. Learners are advised to check everything then. Anything that has to do with tax, we must look at it. Now, number one, we need what? We need SARS income tax, which we get in our balance sheet or statement of financial position. We also need what? Income tax, which we get in our statement of comprehensive income. So you must have those in mind, guys. Let's go to our information A. We are checking for what? Income tax for the year. Let's go to our information A. Do we have income tax for the year? No. We have net profit before tax. Now, net profit before tax, if we're given income tax, maybe percentage, if it's going to be simple, we're going to just take that one and multiply by the percentage. Okay. Then we don't have our income tax. Okay, let's go and check our SARS income tax here. SARS income tax, at the beginning we do have, okay, income tax, we're going to come back and do our income tax. Remember, let's check where is our income tax. At the beginning, balance brought down. I'll use a T account, general ledger account. Here's our SARS income tax. Now, as learners who are doing extra classes from different teachers, I will allow you later on to come up with your own way and also to show other learners what you have learned from different tutors there out there. Okay, now let's go to our SARS income tax, which is information with B. You see your SARS income tax at the beginning. It's written what? CR. So CR, it means it goes to the credit side. Then it's what? 2025. Then it can be 2025, May 1, balance brought down of how much? 36,600. Okay? And then here we are looking for our bank. 2026, April 30, bank. We don't know when it was paid. Yeah, but let's just put it there. And then we're also looking for our income tax because we know that our income tax increases our SARS. We are liable. It's a liability now. We need to pay this. And then income tax, general, yeah. Okay. And then our balance, it's on which side? On the debit. It's written DR. But we know that that is the balance at the beginning. Before it was balance carried down on the credit side. So it will be balance carried down. Of how much? Of 21,270. Okay. So we are looking for this bank. But we must also get this one. And then income tax. We are given what? Okay, again, let's go to the last information that we are given financial indicators. You see your financial indicators? So we are going to use those financial indicators in order to get our net profit before tax. Because remember, net profit, to get our net profit after tax. Okay. So it's net profit before tax minus income tax, then you get your net profit out. Again, you must know your formula to calculate E Roche. What is the formula to calculate E Roche, guys? Net profit. Net profit after tax. Divide by average, which is 1 over 2. And of your what? Of your shareholders. Shareholders equity. Shareholders equity. This one, let me just write 2025 and shareholders equity for 2020. 2026 times 100. Okay. Now let's just substitute what we have here. We don't have net profit after tax. Now the net profit after tax is going to assist us to get what? Income tax. Ne? Okay. Now let's substitute what we have. Um, we have, yeah. Remember MST learners, maths is their thing then. Okay. Remember, we are promoting these guys. Ne? We make sure these learners must also enjoy what? Enjoy mathematics. Eh? Okay, cool. Now, here we have net profit. As we are doing this, net profit after tax. And then we have 1 over 2. Now, let's go to our information. We are looking forward. Here's our formula. 6,062,000. Eh? And then you add 5,124,800 times 100 equals to. Again, already we were given the Rocher, which is how many? 14,4. Yeah, they must tell your learners that you must not put a percentage. Because you know, when you multiply by this, that's when you get your percentage. You must not put over 100 or percentage there. So we have this. Then we are going to have our net profit after tax. This divided by 2 is going to give us what? 5,593,400. Again, that 100. No, that 100 equals to 1 4. So we are going to divide both sides in 100. Let's divide by 100 this 100. We are trying to cancel this 100. Then we cancel this 100 again. Okay. And then this one. And then the net profit after tax over 5,593,400 equals to 0,114. Ne? Eh? Yes, ne? Yeah. Then we call it what? Cross multiple. Ne? Eh. So it means the like terms are this side. Eh. We are going to take this one and then we multiply by this one. Okay? 6, 3, 7, 6, 6, 3, 6, 4, 7, 6, 4, 7, 8. Can we put it 8 here? Why? Because if you look at your question paper, they say what? They say, can you take it there? They say you must calculate the net profit after tax, round off to the own number, nearest whole number. So it will be what? 637,648. So this is our net profit after tax. So this is not our final answer. Remember, we are looking for what? Income tax. We are looking for income tax so that we can use it here. Okay, remember, what is income, net profit after tax? How do we get in net profit after tax? We say net profit before tax minus income tax, then we get our net profit after tax. Now, can we go to our information? Do you see your net profit before tax? How much is our net profit before tax? 674, 230. And then we are looking for our income tax. Then we are going to say what? 674, 230 minus your what? Your net profit after tax, which is 637, 648. Then you get what? Income tax, which is 30, 36, 5, 32, 82. Okay, thanks, Temba. Okay, this is our income tax. Remember, we are going to take these to our SARS income tax. Ne? How much our SARS income tax? Then we are going to add it. It will be 36,582. Then we are going to add these three. Let's add these three. What to say English? Where is it? Now 944452 94452, and then it will be 94452. Then your balance here to be, and then balance 21 to 70. So Tina, we are looking for this. Eh? So on the answer column there, we must go and write 94,452. So as I've already said, later on you are going to assist us on the way that you were taught by different tutors learners. Eh? Now let's go to the second part. The second part is dividend paid. Remember, guys, I gave you some formulas on how to calculate your dividend paid. If you still remember, we said it's our interim, and then you add your shareholders for dividend at the beginning. You still remember that? Now, let's go and check if we do have our interim. Let's go through our information. Advise you guys start from information A until the last information. Eh? We are looking for what? We are looking for interim. You know the formula, eh? Interim plus shareholders for dividend at the beginning. Now, if you look at our information there, do we see interim? Yes, but we are not given what? An amount. Eh? If you go to your information D, bullet number 4, you are given that on 30 September 2025, an interim dividend was paid. Okay. Now, where do we get our interim? If we're not given. Usually we do get our interim if we have our retained income. Ne? If you prepare your retained income, that's when you're going to get your interim dividend. Now, let's check if we have balance at the beginning and then the balance at the end for interim. If it's the case, then we can usually easily do what? We can easily prepare the um, retained income. Now, there's also an alternative where you can use what your 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 T account for retained income, ne? So that you can get your interim dividend. Now, guys, let me just prepare the retained income so that we can see how much is our interim dividend. Ne? Now, let's start with our retained income. It was not supposed to be prepared, but because we want our interim dividend, we are up to do that. Ne? So, let's start again. The structure is very much important. Ne? You must know how to prepare your retained income. Now, how do we prepare our retained income? Here's the structure. The structure it says what? Balance at the beginning. Eh? Yes, balance at the beginning. Yes, our structure. Shai. Here we are preparing a retained income. There's balance. Balance at the beginning. And yes, Chino, we have net profit after tax, Chino. And then Temba, we have what? Repurchase. Ne? Then we have what? Dividend. Dividend, Paloi, under dividend, what do we have here? Interim, Paloi, good. And then what else? Final. Ne? Now, this one is paid. Ne? The interim. We are looking for interim because we know the formula. Ne? To calculate the dividend paid, we must have our interim and then we add our shareholders for dividend. Ne, Paloi? Paloi? Vuma pe. Dividend paid, it should be what? Interim and final, which is our shareholders for dividend at the beginning. Shareholders for dividend. Yeah, you can also say AKA, also known as AKA final dividend. Also indicator last year. Eh? Yeah, what? Okay. Now, let's go to our information, guys. We're going to prepare. We are looking for what? Retained, interim dividend, but we need to prepare what? Retained income. Okay. Balance at the beginning, how much is it? For 800. At the end, yes, balance. At the end, we have 210,000. Is it? Yeah. Repurchase. Now, repurchase, remember, let's go back to our what? Our ordinary share capital. We're given our repurchase, and also in our information D, we're also given the amount for repurchase, which is how much? The amount for repurchase in information D, 150,000. If you still remember the triangle, guys, the triangle that we did last time there, where we have cash flow, ordinary, and retained. So we're going to get the difference. That one minus that one, we get this one. So already we are given the amount for cash flow, which is 1,150,000 minus 874,000. That is what we got from our ordinary share capital, the average share price there. And then we are trying to get what? Above average. Then the above average is going to be how much? 76,000. Then net profit after tax, already it was calculated as we were looking for our income tax. Here's our net profit after tax, which is how much? 637,648. So remember, your repurchase must always be in brackets. Okay. Now, our final dividend, guys, as I've already said, it's also known as what? Shareholders for dividend at the end. That is our final dividend. Now, let's check. Do we have shareholders for dividend at the end? Yes. AKA, we do have. How much is it? Is 253,848. That is our final dividend. Now, let's solve for this here. We know if we want to get the balance at the end, we are going to say balance at the beginning. You add with your net profit after tax, you subtract your repurchase, you subtract your dividend, you are going to get this one. Yeah. So now we don't have this. So we need to solve for dividend here. So what do we do now? We start from the bottom, going up. Let's start from the bottom. It means if we're starting down here, where there are brackets, you are adding. Where there's no brackets, you are subtracting. So we are going to start 210,000 plus 276, which is going to be 486. And then you subtract this, you get how much? 5, 7, 2. 5, 7, 2, 4, 4, 8. Okay. Here is our total dividend. Remember, total dividend is interim plus final. Okay. Now, if we have this, now it's simple to get our interim. Okay, we can say what? We can say this minus this, which is going to give us how much? 18,600. Here is our interim. So now, because we get our interim, it's simple to prepare what? Our dividend paid, which we are going to say what? 318,600 plus your shareholders for dividend at the beginning, which is how much? 265,000. Then you get your dividend paid of how much? 5? Huh? 583,600. Now, guys, you remember I showed you two methods to calculate dividend paid. We can also apply that other method because now we have what? We have total dividend. Here's our total dividend. The other method, it says what? It says shareholders for dividend at the beginning, then you add your total dividend, then you subtract your shareholders for dividend at the end. Then you get what? Then you get your dividend paid. Now, let's use the other method where you are saying uh, shareholders for dividend at the beginning plus your total dividend minus shareholders for dividend at the end. Now we just substitute what we have. Do we have shareholders for dividend at the beginning? Yes. How much is it? Is 265,000. It's our 265,000. And then we have our total dividend, which is how much? You add plus your total dividend, which is 572,448, and then you subtract with your what? With your shareholders for dividend at the end, which is 253,848. Then you are going to get the same answer, which is how much? 583,600.